All right. So once again, when we decide to, all right, when we decide to open up QuickBooks for the first time and we are using it and we're going to be using a previously opened workbook or working data file, right? Company file. Okay. This is so right here, as you can see, is your recent company files that you recently opened, either yesterday or the day before. It's all here, right? It gives you timestamps and everything. So what you can do is you can just double click on the one that you are trying to open or trying to work on. So for example, yesterday we were working on expenses 21 over here. So it's expenses 21 QBW, okay? I could just double click it and the first thing you should pop up is the password. Okay, now if this is a frequent one that you keep using, sometimes you don't need to add your password. I've seen multiple occasions where I've opened up the same file and it doesn't require me to put in a password because it's the same password and I'm opening the same thing over and over again. So sometimes it kind of memorizes it for you, or if you are using the program the same day, and you're opening that same file again within that same day, it will just sometimes remember your password and it will let you through. So I think I have my cap locks on. Oh, wait, I think I put the wrong password actually. So password, once again, in your book is Questiva21, okay? And it should save everything that you've done from the previous day. So if you want to double check your work, best thing that you could do is check back on the last transaction that you've encountered or that you recorded. It should all be there, okay? So for me, I don't really recall what we actually last did except for printing checks and doing a credit for a vendor. So what I'm going to do is I'm just going to double check at least my checking account because I know that we made a bunch of deposits earlier. And yes, so there is. So here we got the Nellis Distributing, which was the last thing that we did. We paid off Nellis Distributing for the amount of $275, and there it is. See, boom, right there. Already, without having to save my work or anything like that, it has already saved my transaction that I've entered in yesterday, okay? So once again, you can just close that window because we double confirmed that all of the transactions have been there since then, right? All of my deposits have went through, okay? All of the checks that I wrote out by bill payments, etc., they are all still there. And my voided check for 6,003 is still there, okay? So that means I am good to go. All right. Now, from yesterday's conversation, we were talking about what happens when you're dealing with vendor credits, right? We got to take a look at how you can use a vendor credit as a way of either a refund or in terms of a discount that a vendor offers that you can apply to the invoice, okay? In this case, right, this is the exact part where I left off, which is talking about vendor deposits, okay? Now, oftentimes, when you're working with a company and you're asking them to fulfill a service or fulfill a job, right? Sometimes they can give you a quote and require some kind of payment, a down payment, or some kind of offering to ensure that you're committing to this project. You're wanting this project to be done, and that you're willing to pay for it. Okay, so in another sense, that is a reason why a lot of businesses nowadays, they require a 50% down, especially if you are a new customer, because you can turn around and go to someone else and get their services and basically drop the other company. So in this way, this is some kind of safeguard for the vendors to protect themselves. If you ask for a project to be completed completed, but you end up dropping that project, at least they can at least get some portion of the money out of it, okay? Especially when you're dealing with large projects, or if you're buying machinery that's a lot of money, okay? So, a great example is like a marketing photocopy center place. If you purchase about like 5,000 flyers, there is a 50% down pay that you have to file, or at least give them an advance payment. So that's essentially what a vendor deposit is. It's an advanced payment, but in this case, the vendor is requiring this advance payment. Okay, and this is what you will do. So, for example, in this book, it tells you, well, okay, Mr. I think it is Bob Mason, wants to purchase something, and this is how we're going to utilize actually, no, I'm sorry, not Bob Mason, us, right? We decided that we want to go rent out some equipment, and they require a deposit of $200. Okay, so we're going to be making this deposit out to Rodriguez Rentals. Okay, so take a look at here. So this is what you first have to do. So before you validate, so you're going to be doing a whole bid, purchase order, whatever it is with them, right? And they're going to give you a quote, and they say, okay, I require a deposit or a down payment to just, ensure that the job will be completed and that you're committed to this date. And then we'll come and bring the people in and so on and so forth and provide the service for you. So we're going to go ahead and first thing is make that deposit. Now, they recommend that, if you're going to pay by credit card, use the credit card. If you're paying by a check, whatever means that you pay for this advance payment, utilize it. So in this case, we're going to be writing a check. So right there, I have a check. I have the check to be printed later because I'm just going to print it later. And the date I believe that they have is going to be February. I believe they have it as February 22nd. Okay, for this deposit, down payment. Okay, now this is what you got to do. So first thing is that we know who this person is. It's going to be Rodriguez, Rodriguez Rentals, okay? Information's already filled in there. Now, they require a $200 deposit. So here, whether you fill it up here in this box up here or down here, down below, it's still gonna fill in automatically. So I'm just gonna go ahead and do 200, and it's gonna automatically fill down here for $200. Now, what this is going to be, the account that you're going to associate this down payment to is going to be your accounts payable account. Okay. Now, in this kind of sense, right, when we're dealing with this type of idea here, is that we are making an advance payment, right? In our books, it's going to be considered some kind of prepaid amount that's for something, okay? But on the vendor's end, it's something that I'm making a payment towards my accounts receivable. And that's what I'm doing right here. I'm making a payment towards my accounts receivable because when I receive the bill, I'm going to revoke this or redeem this this credit. And what's going to do is it's going to revert it into my bill payment. Okay, so first things first is you're going to recognize it that it's going to be for the accounts payable account. And I believe this is deposit for video equipment. Okay, rental. All right. That's good enough as far as that. If you have your class settings on, okay, once again, you can use that. One thing that you want to do is when you're linking this and making this down payment, right? The best way for QuickBooks to be able to recognize it or pick about up this accounts payable is by linking it to the customer/job. Okay, so in this case, the customer/job is going to also be once again Rodriguez Rentals. Okay, and then the class for this one, again, we're making this class going to be Walnut Creek. Okay. So that is that. So once everything looks good, that's when we could decide, okay, everything looks good, so we can go ahead and save and record this $200 down payment deposit, whatever you want to call it, okay? So in your books or in your check register, it appeared that you already made a payment to Rodriguez. Right here, it says that you made a payment to Rodriguez Rental, okay? So then the next thing you got to do is now we need to enter in a bill. Okay, so for this example here, I'm going to go ahead and click enter bills. All right, and I'm going to say that I received this bill from Rodrigo himself, right? The Rodrigo Rentals. Okay, I'm going to enter in a bill just as normal, because what I'm going to do is I'm going to take that credit and I'm going to apply it to this invoice, okay, or to this bill, excuse me. So by doing so, that's what you have to do. Now, again, the reference number, I believe, in this case, for the Rodrigo one is 30, what was that?
1352.
1352, okay? And this time, okay, they're saying, okay, the job has been completed. But what happened was, this time, the bill was actually only $185, okay? All right? It was only for $185. Now, once again, this is going to go not to accounts payable. This is actually going to go towards equipment rental expense. Okay, so equipment rental expense. Okay, and it's going to be for $185. Once again, the memo is going to be, I believe we borrowed a video equipment rental. Okay. And class, once again, is Walnut Creek. Now, you can, if in your book it says that you rented this out for Miss Miranda's Corner. In this case, it's up to you. This is just an example. You don't have to type in here, but once again, we rented this out for Miranda's Corner. Okay? And you could choose whether you want to have Miranda reimburse you for it or not. Once again, this is in chapter 9, so I'm not going to go too much into detail for it, but I am just going to write it in because that's what the book says, okay? So entering in, so here we see that we received a bill from Rodrigo's rental, and they tell me that you're being billed for $185, okay? And I'm going to go ahead and click Save and Close. Now, my bill is for $185. However, I made a $200 deposit. So where did my $15 go? So what happened was the vendor actually recredited you back for the $15, okay? And now when you apply your deposit or your vendor deposit credit, right, it's going to go against the invoice that you just written out, or the bill that you just entered in. But in this case, right, you need to record the money that you received back, okay, to kind of show that, hey, they're not taking all the $200. They're reimbursing me back the $15. So in this case, this is also how a vendor refunds you in this case. They'll send you either a check, and you have two options. Now, in this case, I'm trying to attempt to return this amount, okay? So what I'm going to do is I'm going to go ahead and hit that record deposits button, okay? Because this is how we are going to record the fact that Rodrigo's rental has reimbursed us for that $15 because the service that they provided was only $185. Okay, so in this case, we're here in this table here. You can leave everything as is. There's nothing you need to change here, maybe except for the date. But the date, as you can see, is for the 22nd. Okay, so the first thing is, where are you receiving this amount from, or who? You're receiving this from Rodriguez Rentals. Okay, now which account are you going to be placing this amount in? In this case, you need to refer it back to your accounts payable account because that's where we deposited the $200. So therefore, we need to undo it or put that money back into my my checking account by undoing it through my accounts payable account. Okay. Now, once again, the next one is the memo. The memo here is going to be a refund. Okay. On deposit, okay? And then the next one's going to be, how did they pay you? Did they pay you by check? And if they did, then what is the check number? And then what is going to be going out after that? So in this case, they sent us a check. It was check number 423. And again, payment method, right, is they sent us back through a check. All right? And the last thing is going to be for what amount? And it's going to be for the $15. All right? Once again, class, we refer this to as Walnut Creek. So once you've done this, now this is how we record the money that the vendor is giving back to us. This is a vendor refund. Okay? And because we have to manually update this because, they're sending us a check, this is us depositing it back into our bank account, okay? And I'm going to go ahead and click Save and Close. Once you get that beep of approval, now the next step is actually applying the deposit to the actual bill. So now we're going to go ahead and click Pay Bills. And now up here shows that there are two bills that you have, right? One for the refund of the $15 and then one for the $185 that we were billed for. So right now it shows that we haven't selected any of them, and that's what we're going to do. We're going to select the very, very last one. Now, it appears as if there is two bills, but in this case, this is just telling you that you're getting your refund, okay? That's what the book says. It's telling you that this right here is your refund. But what we want to do is we want to get rid of this bill right here for the bill 1352 because right now it's showing that I owe Rodriguez Rentals $185 when in reality I did not. I've already made a deposit ahead of time. Okay, so this is how I'm going to do it. So now that I marked that I owe $185, right? As you look it down below, it says I owe $185. Because I've already made a prepayment, this is how you're going to recognize it. You're actually going to go ahead and click on Set Credits. When I click on Set Credits, there it pops up. Here it is. The amount, the check that you wrote for the $200, okay? And let's take a look at this. You wrote the check for $200, however, they refunded you $15. So with this credit amount in this check is only worth $185. Okay? So because they refunded you for the amount of $15, that means this check now is only worth $185, or this deposit is only worth $185. So now I'm going to go ahead and click Done, which it will apply that amount, my credit, to this bill, and then now my end result is I owe $0. That's right, I've already paid for it. And that's how you record a vendor deposit, okay? And then you're going to go ahead and click Save and Close, okay? Or in this case, pay selected bills. Okay, you can get this window. All right.
It's really similar, like you do in the discount, no?
It's not a discount.
I know it's not discount. It's a
Similar.
refund. Similar, no? It's you use the same method, no?
No,
Or,
no, because the discount, right? If you remembered, I used it through the credit.
oh,
Okay, that's the difference between a vendor deposit and a vendor like an actual vendor credit, where a vendor sent you a voucher to give a discount for an invoice. In this case, that's this one right here. I have to use the credit window. The other one is I have to make a payment because this is a payment I made in advance. And with through that one, I used an accounts payable account to record my advanced payment. Okay? Now applying it to the bill is similar to applying, yes, it's similar to applying the credit, yes.
mhm.
Okay?
I have to
All right.
read again that. Thank you.
No worries, okay? So that's how we do vendor deposits, okay? So in the future, when you actually start, creating your business and you're trying to build your relationships with some vendors, they may require a deposit just because you're new, okay? They don't know you. They don't know who you are. They don't know what kind of company you are. So they're going to expect that you can at least afford half the payment to ensure that you're not going to flake on them. Okay? So that's how you record vendor deposits. All right. Any other questions? Okay. Okay. No? No questions?
No, I don't think so.
All right. Okay, so we're skipping on forward. Now, the next section we have is paying sales tax. Now, sales tax deals with your customers, okay? Now, making payments to your sales tax people, I'm going to save that for either chapter 2 or chapter 3 because we're going to be taking a look at how do you set up your tax information, how to manage it, and I'll even show you how you can pay for it. So in this case, I'm going to skip this section because it's meant for chapter 2 because it's all about tax, okay? So I'm going to go ahead and skip this part right here. It's actually very, very easy if you actually read it. It's very simple because QuickBooks does everything for you. All you have to do is click here and click Pay My Sales Tax, and that's it. So you guys can read this ahead to go ahead and complete it. But for now, like I've mentioned, I'm going to save that for chapter 2 or chapter 3 just because it's dealing, because you have a whole section about how you set up your sales tax. So I'll show you how to pay your sales tax as well in that section. Okay. So now we're going to be talking about accounts payable reports. Now I'm going to tell you something that's very important to you guys to know because all of these reports that you build in QuickBooks, one specific thing is it has to be in relation to what position you are in the company. If you are the general accountant, I don't know what the accounts payable account would do any benefit for you, okay? Because that's dealing with your vendors. Now, if you're just a regular accountant, does dealing with your vendors have to deal with any of your position? Not really. You're in charge of all the accounts. You're in charge of creating all these accounts. You're in charge of making these, setting the rules up for QuickBooks. Not in charge of, your expenses. Not in charge of your vendors. Same thing with sales. When we dive into the sales process, that whole section is all about sales reports. If you are in the position where you are the accounts receivable or the sales manager, then any sales report is definitely going to be relevant for you. You want to keep track of all your accounts receivable, all the customers that you're dealing with, sending customer statements, making sure that they make your payments on time. Okay, so dealing with all of that, the report is going to be based on the position that you are in with the company. Okay, now with that being said, it also the purpose of creating reports in general is to answer a specific question. Okay, so for example, right, if I am the accounts payable manager, right, I'm in charge of making sure that my bills are recorded, making sure that I make payments to my bills. The reports that I need to know is definitely number one, how much do I owe? Number two, who do I owe? Number three, when are my bills due? Or what reports can I see to see which bills have not been paid yet? All right? So that is what the reports is geared towards, is to answer some specific question in regards to what you're looking for and what position you are in the company. So once again, there's a bunch of positions that you can have in a company. You could be HR, right? If you're HR, you're only dealing with your employees and making sure that you set up payroll and make sure that you pay your people. That has nothing to do with sales. So each chapter that's broken up is basically looking at a position in each in the company, right? So in this case, this is being in charge of the accounts payable, making sure that your bills are being paid, making sure that you record the bills and you set reminders so you're able to make these payments to your bills. So once again, I am just going to briefly go over maybe just one report. But like I've said, if you're not in the position of accounts payable, then none of these reports are going to be useful for you. Okay? Because it's not going to answer any question that you have for the company. So once again, we're going to go ahead and go to reports on the menu, and we're going to locate vendors and payables. Okay? Now, if I go ahead and click or roll my mouse on there, it's going to give me more options on what reports that I can see as what I need to have for accounts payable. So in this case, I can run an accounts payable aging summary. So what that does is basically look at how often you pay your bills, what's the separation period from your last bill to the next bill that you've paid. Okay? And basically it's just payment frequency is what aging stands for, okay? Here you could see vendor balance details, so you could check out all the people who are your vendors, so anybody that provides a product, service, or whatever that they do for you. You can check out each person and their balance information, okay? You can even do accounts payable graph, see how much you owe and how quickly you owe, right? You can even do things like doing sales tax liabilities. So once again, sales tax liabilities, right? When you owe the government money, that they're considered a vendor to you because it's someone that you owe, okay? So once again, these reports are going to be subjective, right? They're going to be based on the position that you're in the company and what kind of question that you are asking. Okay. Now I'll show you what so let's go ahead and check out vendor balance detail. Okay. So again, this is what a report looks like, and we'll take more look at what this report can do in chapter 6, okay? Because chapter 6 is all about reports. Now again, each chapter is going to have a small section about the specific report that's involving the position of that person. So in this case, this whole entire chapter is about accounts payable and expenses. So here you go. Here's a list of all the vendors, right? And you can toggle it. You can customize it, right? In this case, what if I only want to know, how much I owe a vendor on a specific date? Okay? What if I want to know by an actual just vendor name itself? Okay, so here if I want a specific date, I say maybe I want to only see everything that I've done in January. So I can go ahead and toggle this. So January 1st all the way to hold on, I hit the wrong one. So I want to go from January 1st, okay, all the way to January 31st. I just want to know, or in it, January 31st, okay? Okay, so I only want to see what happened in the month of January. So if I click that refresh button, sometimes it won't go. Now, this is the people that I owe as of January. Okay, now I can do that. Or if I want to see everything, I can just go back and toggle all. So as you can see, I owe a lot of people a lot more, right? Because most of my transactions that I've entered were for February. So reports is a very powerful tool in QuickBooks, but just the way we use it, how we create it, once again, is based on the position that you have in the company and what answer or what question you have in regards to the company for the position that you're in. Okay, so once again, I'm not going to spend too much time on here because, again, if you want to know every single one of them, go ahead and explore it yourself. Go ahead and go down to your reports, click on that vendors and payables, and explore every single one. Your book also tells you a brief description of every single one. Okay, some of them are in different chapters, but the most primary ones, such as the aging report, the vendor balance, and the unpaid, we already saw a look at unpaid. Okay. So once again, that is the reports section of QuickBooks. Okay. Any questions there?
No.
No.
Okay. So again, it just depends on which report that you're looking for. Okay. And transaction list by vendor. No, we don't need any of it. Okay. The last section that I want to explore with you guys is going to be probably the one of the most important things that you can learn in this chapter right here is going to be dealing with loans, especially keeping track of them. Now, this is a new feature in QuickBooks, okay? Let me see. I believe you have to have Premier Accountant or something bigger for you to have access to this. So for those who have Pro, unfortunately, you're not able to do this portion, but at least you're able to read it through the book and I get to show you how to be able to do it, okay? Now, with this section right here, keeping track of loans is super important, especially when you establish a business, because at some given point in your, developing your company, you will take out a loan, okay? You will take out a loan, okay? Whether it's a small loan for purchasing a truck, okay? Or it could be a small loan just to get your business up and going, a business loan, right? So how do we get to keep track of it? Now, this is something that QuickBooks has already done for you, is they manually entered in the truck loan for the company already. So it's already been done. But just a rule of thumb, you need to create an account. And what you're going to do is you're going to either use the write a checks window, and you're going to purchase whatever that you're purchasing, whatever fixed asset that you purchased, and you're going to identify that you're using a loan, okay? Now, this loan manager, okay, is only to help you keep yourself in track of how many payments you made, how much money you owe, and so on and so forth, and how much interest you are collecting. Because when we deal with loans and we're doing this manually, you're going to have to manually enter in QuickBooks how much interest is being accrued and how much payments are being made, etc. So you have to do that manually. But because with this new feature with the loan manager, it helps you create and manage it and be able to set up those payments and enter all those interest expenses automatically for you. Okay, now how do I do it? Let's go ahead and take a look. So I'm going to close this window real quick and just refresh so I'm at my home page, right? There's only one spot to find it, okay? And that's going to be on your banking menu, and right here you have loan manager. Only one way. Banking menu, loan manager, okay? Now, when I click on this, it depends on your QuickBooks. Sometimes you may have to update your QuickBooks for you to have access to this, and that's what happened to me. I had to update my QuickBooks, like the file, and then it told me to just restart my computer and it should show up. So you may have to do that in that kind of case, okay? But here, I finally opened up my loan manager, okay, and this is what it looks like, okay? Right now, I have 0 loans, okay? So what I'm going to do is I'm going to go ahead and add that loan, all right? And now it's going to ask me information about my loan. So the very, very first one I had to do was I had to create my loan liability, right? I had to create my loan. In this case, I have it under truck loan, okay? Now the next question is, who did you borrow this from? Now in this case, you cannot type in your answers. Unfortunately, you could type in the first one, the first letter, but it's not going to pretty much help you get there, okay? You have to just type in the first letter and be able to find it yourself. So there you go. National Bank is the person I borrowed from, okay? And now it asks you, when did you actually start? When did you, let me see, what does it say? Original date. So that means, when did I actually start borrowing this money, or when did I get approved for this loan? So in this case, they said I got approved as of December 31st of 2020, okay? And then the next says, how much was the loan amount for? In this case, I borrowed $24,000 to buy my truck, okay? And now it asks you, how many payments do you have to make on it? In this case, I signed up for 60 months, okay? This loan is for 60 months, so that's equivalent to 5 years, okay? Then I'm going to go ahead and click next. So now the next part of information asks kind of more further into detail of when your payments are made and etc. Okay, so in this case, due date of the next payment is going to be January 31st of 2021. Okay, now again, for any reason that you get a nice grace period or a what do you call it? Because some loans, they'll give you a deferral date where they said, okay, if you borrow a loan from me, I'll give you 1 whole year of 0 APR. And then when you actually start making the payments back, it's going to be a year later. If that's the case, then you plug that number in. Okay, this is telling me when am I going to start my very first payment. And I'm saying I'm going to pay as soon as I can. Okay, now how much is the interest that they're going to charge me? In this case, my, next one's payment amount, excuse me. Payment amount is going to be, I believe it's $452.16.
Yeah, I think it's 6.
462.15.
452.16.
452.16. Okay, so that's how much I'm gonna make a monthly payment for. Now, most cases, this is a number you have discussed with the lender. All right. So that's the agreement that you agreed with. You said, I will make $452.16 payment every single month. So once again, this number is already pre-calculated. This is a number that the people at the bank, they're crunching these numbers and they're telling you, okay, if you're going to do a 60 month payment, this is what's going to be due every single month. That's going to include the interest that you're going to collect for borrowing this money. Okay, once again, this is going to be paid every month. Okay, so monthly. So the next section is, does this loan have any escrow payments? No. Okay, so if you click no, then the rest you don't have to fill in. Okay, and then it says right here, alert me 10 days before a payment is due. You can set up reminders for that, so there's no need. It doesn't have to be specifically 10 days. I can make it a day before. Okay. Next. So this is where we're going to set up our interest, okay? So in this case, I agreed that for this truck loan, it's going to be 5%, okay? That's pretty high for a loan, okay? Once again, it's going to be charged every month. It's a monthly interest, okay? And again, you don't need to fill this part in because it's monthly. And then now it's going to ask you, okay, so what account are you going to be what account are you going to be using to pay for this? And we're going to say we're going to use our checking account. Okay, most cases you can't pay with your credit card. It's directly from either your checking account because it's, National Bank is a legitimate bank account. So you're getting a loan from them. So they expect you to pay through your checking account. Next thing is going to be interest expense account. So once again, you have to have this pre-made or preset. So in this case, it is the interest. So there it is, interest expense right there, interest expense account. And it's going to fall under bank service charges. Okay. And then all you have to do is click finish. So in here, right, as you can see, I got a truck loan for my account balance right now is $24,000 because I haven't made a payment yet. I haven't paid anything yet. Okay? I note that right here, my first payment was on January 31st of 2021. Of course, I didn't pay for it yet. But this is just the example. Here it tells us that every payment that I make is going to be for $452.16. Okay. Now, once again, you are not obligated to pay exactly $452.16. You can make a larger payment or a double payment. Okay. You can make multiple payments if you want to try to pay off this loan as soon as possible. Maybe you don't need to pay the $400. You could pay $1,000 at a time. This is just what the bank is asking you. This is what the bank financed for you. Is that, hey, you owe me $452 every single month. Now, of course, every time you make more than the whatever is the payment, it's going to reduce the amount of interest. It's going to reduce the amount of principal that you owe. But at the same time, it's also going to lower your monthly payment. Okay? Now, once again, if that's something that you don't want to do and you just want to just pay whatever it tells you to pay, then that's it. You just pay it. Okay? So that's setting it up for you. So right here, it has already calculated everything for you. Okay? Because I typed in that I'm getting charged 5% interest. Okay? Now, after I've done this, let's go ahead and talk about how we actually pay the loan. So here, if you exit this, right, when you go ahead and make a payment to this loan, what you're going to do is you're going to go back to banking and you're going to go back to that loan manager and look, now it's still there. It's still there and it tells you, hey, you haven't made a payment yet, right? Or you're supposed to set a reminder for that. Now, in this case, how do I make a payment? let's look at my options here. So I can either add another bank loan or whatever it is, add any loans, edit the loan that you have already. And last but not least, I also have here, I could remove the loan or I can set up a payment. So here I click on set up a payment and this is the window, right? It tells me, all right, this is a regular payment, right? Because I have options, right? This is a double payment. This is an extra payment. In this case, it's a regular payment. I click on that. It's for the truck loan for the National Bank. You're going to be using your checking account. So automatically here, this is what is going to be the breakdown. Now, again, if you understand how payments work, it depends on your bank. Sometimes they make that when you have these payments, you can tell the bank how much of it goes to the actual loan and how much actually goes to the interest. But rule of thumb is you are always going to pay the interest first. And that's how they get you. Okay? That's how every time you make a payment to your bank loan, it seems like you never actually reduce your actual principal. That's because all you're really doing is paying the interest off first. Okay? But in this case, QuickBooks has already told us, hey, since it's 5%, this is the deal. $400 is going to go, or in this case, interest is going to be $100. $352.16 is actually going to go to your principal. And that's why your grand total is going to be $452.16. Now, once again, if you've done the calculation, right, and you figured out how much interest you actually are calculating, you actually can modify this, okay? Because if you make an extra payment, you could say, I'm not going to pay interest again. I'm actually want to pay this entire check to go towards my principal, okay? So that's the cool thing about this QuickBooks thing about here, this feature right here is you can toggle and tell QuickBooks to pay towards your principal. Now, that's only if it's the extra payment. But if you are looking at just your first payment, you are mandated to pay the interest first. Okay? Once you validate that is correct, now the question is, what do you want to do? You have two options. You can either write a check or you can enter a bill. And in this case, I'll just go ahead and enter in a bill. So I clicked on enter in a bill and I click OK. So all that information is going to be all placed into here saying, this is your bill, okay? It's due on the 13th or whatever day that it's due. Your billing, your reference number could be whatever you want because this is probably an online payment. And you could choose whatever is selective, all right? Whatever that you want to add the information to this bill that you need to add. But in this case, it is ready to go. All you have to do is just click Save and Close, okay? If you got that beep of approval, now you are done. Now you didn't make a payment because you just entered in a bill. But that's the options there, okay? And that's how you deal with loans, okay? And what happens is every time you pay something, it's already going to calculate $100 is going to go towards interest. So your interest expense for the month of January is going to be for $100. Okay? Any questions in regards to loans?
No, I'm good.
No, I don't think so.
All right, good, excellent. So that's the last thing that I want to talk about in chapter 4. So the last thing that we have left to do is just to go over the review questions. All right, so here we are. We're going to start with multiple choice, okay? So let's see. Okay, so they tells you to select the best answer, of course, okay, for each of the following, okay? Number 1, okay? You may record payments to your vendors by all of the above, right? By recording a manual check, right? And entering it through the checking register. Yes, that's the first thing that we did. We also took a look at using the write a checks function. And of course, we also explored how we can enter a bill and use bill payment to make a payment to a vendor. So D, all of the above is correct. Okay. All right, number 2, okay, to display the vendor center. D. All right, let's see. A, click on vendors on the QuickBooks homepage. Yes, right? That does take you to the vendor center. B says click on the vendor's icon on the icon bar. Yes, that takes you to the vendor center. C, you can use the vendor's menu and then click on the vendor center. Yes, those are all valid ways. A, B, and C. Okay. Yep, D is correct answer. Okay. Number 3, you can add a vendor. D, at any time by selecting new vendor. Yes, okay. You don't need to wait till a certain period. You don't need to wait till the end of the fiscal year. You know, you can enter in a vendor at any single given time, right? Anybody can go to the store and purchase something. They're instantly a vendor. Okay.
You said it was D as in dog?
D as in dog at any time. Correct. Okay. Number 4, okay? Which statement is true?
A.
A.
Right? A is the correct answer. QuickBooks records each bill payment, okay, in the bank account at register, okay, parentheses, or, credit card accounts. So yes, A is true. Okay. The other one statements, they're not true. Let me see, bill payments increase balances in both the checking account. No, that's already automatically wrong. A bill payment actually decreases it. All right. C says that you should assign jobs for all of these discounts. No, that's not true. You don't have to. Some of them are for specifics, but if, for example, jobs are people, you don't have to assign them to people. In fact, you just assign them to the classes. Okay. And then lastly, D, you cannot make partial payments. Yes, you can. There's a whole section on partial payments. Number 5, okay? Which, you okay there?
Sorry.
No worries.
What
Okay.
is the answer for the number 4?
Number 4 is A.
8. Oh, I did 8.
Okay.
Thank you.
Number 5, when QuickBooks Features allows you to separate your income and expenses by line of business, department, location, profit centers, or any other means. Meaningful class tracking. Yes. Right? It's not job costing because that's for when you assign it to people. Okay, class is for anything other. Okay. Number 6. Okay. Oops. Okay. Number 6. If you void a bill payment check, okay, all of the following accounts except
Is it C?
D.
for number 6, sorry, I just read that. All of the following occur except
The decrease on account payable.
yes.
It's D.
D, correct.
No, it's decrease.
See?
D as in David. Okay. Okay. Yeah, because when you void a bill payment, right? Accounts pay.
Account decrease.
Yes, no, it doesn't decrease. It actually reverts and it increases because when you void a transaction, it basically undoes it. Okay. Number 7. Okay, if you want to track the expenses for each customer or job, what do you do?
C.
C. Link each expense with the customer or job to which it applies. Yes, so in this case, this is job costing. Okay.
Then what was 6 again? I'm sorry.
Six was D.
D, teacher.
Okay, D as in David. Okay. Number 7 is C as in cat. Right?
C.
All right. Number 8. Okay. To make a loan payment, you can C. Use the loan manager, right? I just showed you that example. Okay. Number 9. Okay. When a vendor credits your account, you record it in.
B.
What was that?
B.
B as in boy? The enter bills window. Yes. So as we just showed you right earlier, when you go click on enter bills, at the very top of the window, you can switch it over to credit. Yes. Okay. Number 10. Almost there, guys. Number 10. Which account type should you use to track petty cash?
C.
C. Bank. Yes, because petty cash is another small, tiny bank account. Okay? Okay. Number 11. Okay, 11 says the vendor's balance detail report.
A. Show details of each bill's credit, discounts, and payments.
A.
That's the summary. Which one is this? This is 11. Okay, yes. Sorry. Wrong answer. Yes. It does show the details, right? We just looked at that. I showed you an example of the detail one, not the summary, and it showed you a list of all the payments or the bills and all the bill payments. Yes. Okay. Number 12. Okay. What is the accounting behind the scenes for the pay bills window?
Where's the pay bill window?
B, decrease or debit accounts payable, and then decrease or credit the checking account. That is correct, right? Because when we look at accounts payable, right, when you make a bill payment, you're reducing your money. So if by reducing your money, you're decreasing your checking. And by this one, you're decreasing what you owe this person because you're paying them off. So good. Answer is B. Okay. Number 13, okay. It's best not to use which field in the new vendor setup. Okay. All right. A, yes. This one asks which one is not recommended or do not use it, right? Obviously, you can use the vendor name, you can definitely use the address, and you definitely can use terms. The opening balance, they recommend you not to do it because of why? Because if you do use the vendor opening balances, you're saying that you owe this vendor this lump sum money. However, it doesn't give you specific details, like why do you owe this person? What bill is associated for you to owe this person? So that's important about this is why you don't use the opening balances. Okay. Number 14, okay.
What was the answer on 13?
13 is A.
A, okay. Thanks.
Number 14, okay. In the pay bills window, you can sort the bill by D, all of the above. Yes, you can sort it by due date, you can sort it by vendor, and definitely by the discount due date. Yes, right? If you're looking to save some money, you can choose that option. Right? Last question here, number 15. Which statement is true regarding bill payments?
B.
B.
Okay. So let's take a look as we split here. So A says bill payments, okay, increase the balance in the accounts payable account. Now, is that true? Bill payments increase accounts payable?
No.
No, it decreases it. So then B, okay, that when you pay your bills by by issuing a check using the pay bills window, QuickBooks records each bill payment, okay, and in the checking account, okay, right. If you guys remember, right, when I showed you the check register, when you use the pay bills feature, it shows up on your check register as a bill payment, not a regular check. Okay. All right. Good job. Now, I'm just going to go ahead and have you guys answer these 5 questions on your own. Let's see. Let me see what time it is first, and then see if we have extra time. Okay, yeah, we have some extra time, so let's go ahead and go over this. All right, number 1. The blank shows a graphical representation of the steps involved in recording your expenses. Okay. The blank shows a graphical representation, okay? In other...
The home page, because it shows you which way to go.
Exactly, that is correct. The home page shows a graphical representation of how basically the workflow of an expenses. So good. Okay. Number 2, okay? If terms of 2% 10 net 30 is on a bill, okay, it means that you pay the bill within blank days and then you will receive a blank discount.
2%.
10 days.
10 days.
10 days, 2%.
2%.
Excellent. That one's a pretty easy
Okay.
one. Good.
Yeah.
All right, number 3. Okay? Okay? To separately track income and expenses for multiple departments, locations, or profit centers, use blank tracking.
Class.
Class tracking. So once again, another class tracking question. Okay? Number 4, okay? To track job they kind of give you the answer. To track job costs in QuickBooks, okay? Link each expense with the blank or blank to which it applies.
Customer.
Customer/jobs is correct. Okay. Last but not least, right? Number 5, okay? For a bill to be considered paid by QuickBooks, you must pay the bill using the blank window.
Pay the bill.
Pay bills window. Yes. Okay. So, once again, that's it for chapter 4. Any questions in regards to chapter 4?
Number 4 was customer or what?
Customer or job.
Or job, okay.
Mm-hmm.
And real quick, was number 10 D?
Number 10. Oh, I can just give you the answer. Number 10 is C.
Was C.
C as in cat.
And 15 was B as in boy.
15 is B as in boy. Yes, correct. Okay. I will tell you this. There is the answer somewhere in the book. Okay, so in case we go through this thing and you're asking for these questions, for these answers, it's somewhere in the book. Okay? I'll let you guys know at the end of class. All right. So other than that, any extra